Good morning, gang. September 22nd, tradingology.com trading room. We're going to get the doors opened up. Hope you guys are doing well. There we go. Little mini roller coaster today. Good morning, guys. Getting settled in. Good morning, Dave.
Good morning.
Oh, he's all got the collars on today. Watch out.
Only because it's cold.
57 here.
Yeah, it's about the same here.
We might get to 82 today, though. So you got some warmer weather coming.
Oh, that's good. No, it's 54 now. We're getting up to 69, but let's see. Let's take a look. Oh, yeah. Won't get here till a little bit tomorrow, Thursday, Friday, and Saturday. Look like in their mid-70s, low 80s.
There you go. Good morning, Andre.
We always check in the weather first, guys. Forget the markets.
You always got to know what's going on. We had a little mini reversal and another reversal back, so they're trying to figure out what they're doing.
Yeah, so if you bring up the spreadsheet, we kind of take a look at that because we got MT vol back over 100, and we've got some well-formed bearish herding there. We haven't had a lot of well-formed herding on either side, but this looks pretty good. You know, that's pretty good herding right there.
Yeah, if we go back and take a look, when was the last time? Like this tried to be, but it wasn't quite. Because it missed a day in between there.
Yep.
There was maybe, but that one didn't last long. Like it started first, second.
Well, it was down 1,800 points that day. So it's like, well, and when was that? Oh, that was the one in June, yeah.
Yep. So this was the clue right there that it wasn't going to last, and it didn't last right there, but yeah. So either side. So here's nice bullish herding forming outside of the trap. Yeah. We'll get those ones, so that's what we're talking about there, that Dave mentions proper formation.
Yeah, so yeah, we'll see if this continues to fill out, but one of the ways you can tell if it's going to be well formed or not. In fact, today I think would be a good opportunity maybe to go over the spreadsheet a little bit, because I know a couple weeks ago we had somebody asking about that, and we can go over the different columns.
I think that's a great idea, and I can actually show how to update it live at the same time if we want to do that, if people are looking during the day. But this is where absolutely a lot of the strong market indicators come from. So I've had a few people asking, hey, where did you get that? Where does it come from? So this is the source of a lot of that, guys. So the logic behind it, the math behind the scenes, and what builds those indicators, and what Dave put together over the time.
Right, and I won't say that some of the columns are based on the results of other columns' data, and so it's slightly. I'm not even going to use. I mean, you could say it's a neural network of some sorts because it goes down through 2 to 3 layers. So we use the data from one section to create the indicators on another section, and it goes even 3 or 4 levels deep on a, it's kind of like a neural network, but you have to kind of dig into the formulas, kind of see, and some of them use the data from others. In fact, some of them use data from 2 or 3 different columns. But if you go all the way over to the left, let's start way over to the left. And the only thing that we really need to include in an update are the advancing issues, declining issues from the NYSE, the up and down volume. And the reason that I used those was that back in 1992, when I came up with the idea of the market timer spreadsheet, that was the only data I really got from the newspaper, because the newspaper was printed at the end of the day, so I only had end of day data, and I needed a way. And one of the things I did was a correlation coefficient between the price of the S&P 500. So originally it never started out with adding the Dow in there. The Dow came later. but it was the S&P 500 change on a daily basis. So if the S&P 500 was up $1 or $2 or down $2 or $3, I measured it against the relationship between the advancing issues and the up volume and the declining issues and the down volume. And then I created all the ratios from that. And initially, it really, it was only that section right there that I was only looking at. That was the initial spreadsheet. And I mean, I actually had a physical spreadsheet. So I take a piece, I take the graph paper and I lay it out on the kitchen table, and I take the newspaper at the end of the day or early in the morning the next day. But at that time, the newspapers came out, I think they came out like the same day. It was like 7 or 8 o'clock at night, or maybe it was the next morning. I think it was the next morning. But anyway, I take the information from there, I plug it in to the spreadsheet by hand and update these numbers. Now, so the correlation coefficient, it turned out to be a very high correlation between the S&P 500 changes and the internal market data. And it was like 0.92. So it was a positive correlation. And what I found over time as I was doing these numbers was that sometimes the correlation would drop down to like 0.4. So it was less than, it was basically an anomaly, because I knew the correlation over a long period of time was like 0.9 to 0.92. If it was uncorrelated, if it was a drastic change in the correlation, then it was an anomaly. And I looked for those anomalies, and that's kind of where the price anomaly column, the AB column, comes from. All right, so then I just basically, I use the total issues, the total volume in some of the other formulas, and then the up and down volume ratio, the up volume ratio, the down volume ratio, and what I call the volume sequence. So I'm looking, I do look at these. It's not that I only focus on those main columns in the middle there, but I also look at these because when those reach an extreme, typically it bounces back the other way. I don't highlight those, but if you take a look at them, sometimes the up volume ratio is like 0.90, and you'll probably see it when we're up like 1,000 points or something like that. That wasn't too bad. It was up 159. That one was up 500. But if you hold it there for a second, you can see that the up volume ratio there was 0.87, the one that you highlight. And but the sequence was up 0.75. So in other words, it was a 75% of the volume was to the upside. And typically when you're up or over, just like on the internal market indicators that we have in TOS, that's what that's measuring. So we're got a 75% update. And we know that typically on a 75% update, it's going to stay that way for the entire day. And that's a pretty good indication that the trend is going to continue. The share, the up share, which is up S ratio, and the down S ratio, those are the number of issues that are up or down for a single day. And you can see that the sequence at that was at 0.69. So in other words, we had a lot of volume going into the shares. There were more volume going into shares that day than, let's see, the previous day. There was still more volume. We actually had a couple of days back there. It was 1.66 and 0.53. So volume was increasing to the upside. And so I just kind of keep an eye on that. When the volume drops below the share sequence, that indicates that there's not a lot of money chasing those shares. And I look for a reversal. And I think you may see that on the 1146 line. So right on the 1146 line, we were up 165 points, or 155, was it? Or the one, 1146, I'm sorry. Yeah, right there. So you can see the volume dropped to 0.14, but the shares were 0.17, so they were higher. So we saw a drop off in the volume, which gives me an indication that there wasn't a lot of volume chasing that up move, and we're going to probably get some sort of a downturn. That's one thing that I do watch. I kind of look at that to see if there's, if there's not enough volume, that means the buyers are drying up. That's what that tells me. Okay, so that's the other thing, and I do the opposite. On the other side, like when we're on 1152 there, line 1152, we were down 225 points, and we had good volume going into those declining issues. Well, the very next day, we're kind of like less, right? We've got 0.27 to 0.16. So that ratio between the volume and the share sequence is starting to drop off a little bit. And so I kind of pay attention to that. And anything really that is, so if the volume is starting to drop down, we can see by the sequence, shares are starting to drop down. Yeah, it could be that, based on all of the other things that we have in the spreadsheet, that there's a potential for a reversal there and we're going higher. So that's how I look at that column. I just do a brief. I mean, if we look at it today, what do we got today on those numbers? See, yesterday, so yes, this is yesterday's close. 88% of the volume, we had down volume, it was 88% of the market, and we had the down share ratio was, pretty close. So we had more volume going into those down shares. But it's really close though. It's not, it wasn't overwhelming amount of volume going into those shares. We'll kind of see what happens, but if we see it declining today or even going positive, we'll have to kind of do an assessment, but it doesn't tell us anything really about where the market is headed at this point. We did see an increase though. If we look at 1186, we were at -5, but we had 0.22 shares, so it's a negative. And we're down only 130 points, but the next day it went negative again. And now this time the volume was increasing, right? It's 0.43 versus the shares down were 0.31. So we went from 0.5 to 4.3 and 22 to 31. So not only did the number of shares increase that declined, but we also had a lot more volume going into those. So that's a potential clue that we could also see a decline. It's not conclusive, but it is something that I look at. All right, then if we go over to column X, which is the average volume per share, one of the things I looked at the total issues and the total volume goes into that calculation. And what it does is it tells me whether or not overall volume is rising or not. As I mentioned many, many times in the trading room, if we get over 1,500 on that, which means the average volume per share on the New York Stock Exchange is 1.5 million or more, it indicates that either there's a lot of fear coming into the market and people are dumping their shares, or they're, if it's an up move, they're buying shares. And typically on an up move, it doesn't last very long. We might get 1 or 2 days where it's like that. And that happened, I don't want to distract people too much, but if you go back to the last election, what was that, November 2017? 16 was it?
Yep.
Okay, so if you go back to November 2016, right around election time, just after the election on the 9th, I think it was 11, because for some reason the election was over a weekend or something. I don't know, it's kind of weird. So you can see that 11-1, 11-2, 11-4, that's when the election happened. Nothing really happened. It was after the election that we got the results. And then on the 9th, we got a 256 point jump and big AVS, so big average volume per share for a good 4 days in a row on an up market. And it didn't matter how much the points went up, it went up, and it went up on high average volume per share. That means that at that point we had the election results, Trump had won, and institutions were in buying stocks like crazy. So the average volume per share really kind of measures the institutional involvement. Because, you know, 90% of all the trading today is institutions. And they came in 4 days in a row and just bought it right up. And so
this is the week. So this is Monday.
Yeah.
This is election day. And exactly, that's where it happened. Yep.
Yeah, it was funny. We were up on the 7th, up 371 points, but on low relative volume. Really, actually, fairly low. But if you look at the up volume sequence, this volume sequence, it was pretty high. You know, it was pretty high. It's 0.81 to 8.64. At one time, I think one of the indicators does that relationship between the two of them, and it just showed there was a lot of volume going in. Even then, even though the ABS wasn't high, so institutions probably stepped in earlier at that point. It kind of gave me a clue something was going on. And then from 2016, I mean, the market. Look what the market. I mean, the market has just been on a tear. So if you're a long-term guy or girl, and you want to get into a market after it's been kind of beaten up, and the market was kind of beaten up at that point, just before the election, I think there was a lot of doubt and uncertainty about what was going to go on. That's a good indication. And then, of course, in March of this year, we had a lot of high ABS and a long period of selling at very high levels there. And that gives me also an indication that this thing is not done. That as long as that ABS stays high, we are in a bearish mode and we're going to continue to decline. Now, that lasted for a very long time. Even when we started to go up, after we hit the bottom, that remained very high. And I think there was a lot of people speculating at that point that the reason that the volume was so high was because the Federal Reserve had stepped in and started buying stocks. So anyway.
I just drugged that. That's 100 cells, and only 3 of them were below 1,500.
Yeah.
So that's 3+ months.
Yeah, 3 months of you know, and then you want to check the bearish herding. At some point, it just kind of dropped off, and we went into a fat tail scenario with the bearish herding. And yeah, then the bullish herding just kind of completely took over on 324 there when we're up 2,000 points. So, you know, and then it looks like everybody's jumping on board because they think it's a dip, but so it's not the same scenario as November, but when ABS is high, you just want to kind of be cautious there.
Then you run into that too.
Ran right into that. Yes, exactly. But no bearish herding to speak of after that. All right, so let's go. So that's how I use ABS, the average volume per share. If it's high on a down day, that indicates a lot of selling coming into the market. And then, of course, I match that always. I match it always. It's kind of like food pairing, you know, or wine pairing with food. If you want to match the high ABS with the price, if it's down, you want to look at MT volatility. So I'm pairing that with MT volatility. And I see MT volatility consistently above 100%. And all that means is that we're probably going to see more volatility. Now, volatility is not always to the downside. Sometimes volatility is to the upside. So we could see a day where we're up 500 points and still have high volatility. So that's how I look at those. And then, of course, very, very secondarily, I'll look at the pipeline. I just kind of say, oh, what's kind of going? It's mostly red, mostly white. What's going on there? Is there big drops, big increases? That's all I'm really looking at there. And then the most important thing I look at the spreadsheet is the bullish and bearish herding. That's the most important to me. I want to see where the power is, where the money is flowing. That the bullish and bearish herding is really where the money is flowing. And it's 5 columns across, and what it does is it's measuring those up volume ratios and the up share volume ratios on a daily basis. And actually it covers the exact formula for them is a cover of those over, I can't remember, I think it's a 10 or 20 period. I think it even goes up to empty volatility goes up to 100%, 100-day of the up volume and the up share ratio. The bullish and bearish herding are a little bit more, they're based on the level of the up volume ratio and the up share ratio. So if it's over 50%, it'll go in the first column. If it's over 0.55%, it's in the second column. So over 0.6% goes in the third column. So it builds out over time, showing where either the bulls or bears are putting their money and seeing where the herd is moving that cash into the market or taking it out of the market. That's what bullish and bearish herding really is measuring. And that is like the first go-to thing that I kind of look at, because it's very visual. I can see instantly, hey, we're getting some decent bearish herding. But it's funny, since I started the spreadsheet back in early 2016, it's almost always bullish herding. There's usually just, bearish herding really doesn't last very long, except for 2008, 2009, 2013, end of 2018, and then today. I can pick them out, on my hand. I could just count them. And so it's very visual. I can see, which side of the market people are putting money in or taking money out. And then I go over to, now the BFP curve, I think one of the reasons why it doesn't work as well as it used to, it's okay, I'll look at it, but it used to be a much smoother curve. And I think one of the reasons, like up there, when we have a really, really good move, it's well formed, just like the bearish herding. But when it's really jagged and stuff, it just tells me that the market is very conflicted, that it's not growing nicely. See, that's a really nice negative bell curve right there. That's perfect. That's really, really good. And when it started coming down, we ended up, a couple of days up 11, 1200. It kind of peaked out there and came back down. So there's a nice bell curve right there. So when that comes down again, we go negative. It's a bullish bear curve. And I also look at on the bullish herding right there, you see that all the columns are filled out from the first all the way over to the sixth. And that indicates to me that we're probably running out of steam. We haven't seen that very often lately, but it used to happen quite a bit. And sometimes you get 2 or 3 days in a row like that, and you get 2-3 days in a row, then you're done. There's not too many days like that. That means that there's all of the bulls are on one side of the market, and they're probably going to either take a breather or maybe some sellers will step in. But that was really big bearish herding right there. Pretty big moves too. All right, so let's go over to the strength. The strength index is just an indicator of, hey, look, if we have a lot of upside momentum, it's going to hit over like 2% or 2 to 3. If it's really bad downside momentum, it's going to be -2 to -3. And you just kind of want to, you kind of do a quick measurement, and you can tell, just based on the trend, I kind of look at it. It's very much of a secondary indicator, or even a third indicator. Same thing with the swing algorithm. A little bit on the delay. It'll kind of give you. Sometimes it'll give you an early warning whether or not we're going higher. Like on 1170 there, on that line 1170, you can see we turned up when the Dow was down 60 points, and we had a nice 3-day rally. So sometimes it could be good as an indicator, just on general direction, but it's very much, again, a secondary third indicator. The 21-day sum and the 27-day sum is something I really pay attention to, because when we start to get up into that, what it does is it measures how much the Dow Industrial Average has moved in the last 21 and the last 27 days. And if it's gone up over 2,000 points in like 21 days, it's kind of a red flag to me saying, hey, look, this thing is probably overextended and we're probably going to get a little bit of a pullback or at least just kind of sideways movement. But it's very bullish because in order to push the market up that much in a short period of time, we have to be, we have to have a lot of volume behind it. So it is bullish, but like recently, if you go down, I mean, we've had a couple of days, we were up around that 2340 level. And then when the 21 and 27 day sums match, which was like 3 days later, like 2272 and 2516. Now they get really close together. That's at the point where I say, okay. And even the one before it, they were real close together. They started closing that gap. Sometimes there's a gap of 600-700 points. And when they start to get close like that, say, well, and we're up at 2000, that's an indicator too that we may see a little bit of a decline coming because it's overextended itself. And then on the opposite side too, when we're down negative 200 or 2000 to 3000. In fact, back in March, I think we hit minus 10,000. That was incredible. That was the biggest one I think I've ever seen. Never saw that before. It's like right there. It's minus 10,000. That was crazy. That was a good time to buy. So.
Yeah, 3 days you had 4,000 points.
Yeah. So those are good times right there to take a little nibble into the market because that's just unprecedented. And then it comes out and then it rolls back. So it rolls from positive, negative, negative to positive. But I do take a look at those levels every single day. The four real important things that I take a look at every single day is the average volume per share, empty vol, bullish, bearish hurting, and the 21, 27 day sum. Those kind of tell me where we are in the markets. Those are the most important. Average volume per share, is it normal or is it high? Empty volatility. I want to see where we are. Are we in a high volatility environment? Are we low volatility environment? The bullish and bearish hurting, where are we going? Who's on what side here? Are we too much on one side? Are we starting to build momentum on the bearish side or are we, the bullish side? And then the 21, 27 day sum, where are we as far as the momentum of the market goes? Are we too high or too low at this point? We obviously on the 827, 828, day 31, they were all on the high side. And then I come to, so I get the overview of the entire market. That gives me a broad overview of what potential remember, we only deal in probabilities. So we look at the probabilities of what's going to happen on the day that we're trading. And then I'll look at the buy-sell signal. Is it going up or down? And I'll look at the price anomaly. Those are the two last things I really, really look at. And those are decision makers for me. So I'll look at the overall. Are we bullish or bearish? And right now we're bearish because of the bullish bearish hurting and the high empty volatility and the high average volume per share. So that's the big picture. Now on a decision-making point, is the price anomaly over 100? If it is, then I'm anticipating a potential rise in the price. Now, the rise in the price could happen at any time. In fact, we saw a rise in the price last night. It was up over 100 points at one point on the Dow futures. Maybe that was it. Maybe that was the 133 I was looking for, and that was it. It may not close that way today, but it's possible. The other thing I'm looking at is the empty volatility over 105%. So I know we're going to get a lot of up and down movement. And then the 21, 27 day sum, they're heading negative. How far negative we go, I don't know. But if we get down around 3,000 on the negative side, then maybe. But the buy sell signal is also declining as the 21, 27 day sum are going down. So I'll look at the price anomaly. So there's a potential here for a market to go up a little bit, whether it happened last night or at the close. At some point in the next 24 hours, we're probably going to get a pop in the YM. And we saw that last night when it was up 100 points. But the buy-sell signal is declining. So those two, the buy-sell signal and the price anomaly, are what I'm kind of looking at for the setup for trading the next day.
That's what goes into the notes, right? The high level things that you're looking at. And they're
Yep.
red if they're bearish, they're black if they're bullish.
Yep.
So sometimes we have duplicates. Just like Dave was talking there, PA was 133.
Sorry, sorry about that.
It's all good. So Steve was asking, or Steven, sorry. He says, do you typically use the information from the spreadsheet? I think you kind of covered this, but just to make sure, for the longer term, broader approach to trades or for shorter trades in the next day or both. He's having some difficulty short term. So I think you covered it, but I'll let you say it in your own words with, yeah, it's more longer term. You kind of know which side of the tide you're on, which way the herd is going. And then looking for those. And he also asked, I was thinking a step-by-step daily evaluation, like you just said, you do, but in a spreadsheet in the download section would be nice in the spreadsheet form. So that's kind of what the notes are, but maybe I'll let you expand on that, Dave, on what you think. As he's looking for a fun game, he's winning. Oh, he's got a phone call. Gotcha. So he'll be back shortly. He got a ring. So yeah, Steven, that's it is definitely the barometer of what the market's doing. So it is high level. It's not specifically for like a scalping trade or a quick in and out trade. But if we see things like this, like, yeah, we're definitely bearish signals here. As he mentioned, 105 over 1500, bearish herdings filling out, properly formed, swing signal turned, buy sells on the downside. These are all bearish signals with what he just mentioned of this is a bullish potential spike, which is why the notes call that out. Bearish, bearish, bullish. It's black. So it says, yeah, we could have a spike up. MT vol is rising, just like Dave said. So if you're looking for a day trade, I'd probably lean towards a short versus a long because that's the way the tide's turning right now.
Yeah. So what I was looking for was a short when it went up 100 points.
Exactly.
Yeah. So if it's going to get a pop of 100 or so, then I would be looking at the short position because everything else is bearish.
Price anomaly column is right here, Andre, just to the left of the MT volatility. So whenever that's over 100, and it doesn't matter if it's plus or minus, that's where there's the potential for the snapback from whatever it just did that day. So we were down 500 with a PA of 133. So there's a potential for 100 back the other way. Or I shouldn't say 100, excuse me. It's not a figure, but just a snapback or the bounce up. So whether these are red or black, Dave, correct me if I'm wrong, you're just looking for it when it's over 100. So if we're up a lot,
yeah,
and it's over 100, there's a potential for the snapback down. Then the next
right.
day we had a down day on the Dow.
Right, and that was the closing number. It could have been down much more than that during the day. Same with the all of those numbers. At some point, so if the Dow is down and we've got a price anomaly over 100, I'm looking for a snapback the other way. Yes,
A reversal of what the previous day was, basically, at some point in time.
Yes, exactly.
Perfect. Okay.
So this is my. I don't do anything as far as any of the positions unless I look at the spreadsheet first. So I'm not going to do any trading. I'm not going to put any positions on. Even as we mentioned on the VXX trade, I will look at this first before I put on a VXX trade. So,
Andre, the buy sell is just to the right of the 21 and 27-day sum here. Is the buy sells right here. And this will ride and wave similar to a bell curve. Maybe we can make a curve out of the buy sell because it does seem to go up and down. But we do also see that is plotted here in the buy sell signal graph or chart. So you see that how it does go, it oscillates almost. Where it turns, that's not guaranteed, but it gives you a feel for where we are.
Right.
So you see it goes down to -7, now it's back up to 5. 5 could have potentially been the peak if we're going back down. So that's that. And that's the top of the hour, passed already. Wow. We might have to have a second section just to do some maybe updates, or we can cover this again. But shoot us emails, guys, if you have questions on anything we didn't cover. But I know that'll definitely help a lot of people out there. So we appreciate that, Dave.
Yeah, no problem. I think it was a good time to review it and to update everybody. The spreadsheet has been consistent now for over a year. I haven't had any new columns, but all of the indicators that are there are worthy of studying on a daily basis. It's what I do. It's how I trade.
You're welcome, Stephen.
You're welcome, Stephen. Yeah, if anybody has any questions, send them in to Dan, and we'll cover them certainly in the next or most available trading room.
Absolutely. All right, gentlemen, have yourself a good Tuesday, and we'll chat again tomorrow. Andre,
All right.
just how would you read this one? Go back and read our recording, Andre. You'll see how we read it. We're mainly bearish right now.
Yeah, yeah, bearish earning. All I do is look at the bearish earning, MT vol, average volume per share. Yep, it's looking overall very bearish.
So looking for a spike up. Look what happened this morning. Spike up happened in both the in the YM and the ES, and they both tailed off. Went to the same level again.
Yeah.
And then we've just dropped down. So I weren't even watching this, but yeah, there's the. So you're on the right side of the trade when you're going bearish today.
Absolutely. We've got the DXY up another 0.5% today too. So cryptos might feel it.
All right, Dave, I appreciate it. Until tomorrow.
Okay. Thank you, Curtis. See you, Dan. Have a good day.
See you guys.